Welcome, Solid Source. I am thrilled to be here with Linda Stratton from Northpoint Mortgage. And in just a moment, Linda is also going to be joined by Lou Sarris, who is VP Sales Manager at Northpoint. And you guys are ridiculously knowledgeable, and with all the buzz going on right now in the marketplace about interest rates and is it a good time to buy or sell, what's going to happen, we thought it would be a wonderful opportunity to have you guys come on and just answer frequently asked questions about lending and just share all your knowledge and encouragement.
Well, thank you so much for having us. We're excited to be back. And the industry is unique right now, and we're all having lots of fun, so we need to remember we're all in this together, and the more we can learn from each other, the better off we'll be, and the better off our customers will be.
You know, we've all been used to a really low interest rate environment over the last few years. This year, not so much. You know, the last 7 months, we've doubled interest rates. We think that this is basically due to the federal government stopping purchasing mortgage-backed securities. And they are getting out like in the droves. And that also is deteriorating because of the rising prime rate that they're rising as well. The Fed raises their rate, interest rates are going to follow.
You know, I think that this is an opportunity for agents and lenders and everybody to educate the buyers. They're so used to that very low rate, and they just know, that's what they know. So at this point, we need to understand historically, we're at below an average. An average, what'd you tell me, 7.25%, 7.5% was the average over the last 30 years?
Yep, 30-year average has been 7.25%.
So we're still below average. We were just spoiled. And I know we all love to stay spoiled, but now we have to go back to reality a little bit, even though it's not as fun.
Will it last this long? Or how long will it last? Rates will come back down. They may not be in the threes again, but at the end of the day, we're going to see rates drop again, for sure.
But people need to understand is even if rates are high, you're still building equity in the house. So you haven't lost something. You just may be putting a little bit more towards interest, and you need to look at that. I bought my first house in 1983. My rate was 13.5. Okay? I still bought a house. I still sold it. I still went to my next house. It doesn't stop life. We need to get the interest rate mind out of our head and understand that there's so much more to it. So if you find a house you love, don't give up the house just because of the rate.
Advantage Plus. Yeah. So our Advantage Plus program, we're basically asking our buyers to turn in all the documentation as though we have a contract. We're sending them through formal underwriting, getting them completely underwritten and completely approved with the exception of a title order and possibly an appraisal. What's that mean to the buyer and to the seller and to the listing agent, the buyer's agent, that we can turn, once they're under contract, we can turn this around in about 2 weeks and close them.
Okay, I love the idea of assumable mortgages, especially for listing agents. This isn't on our side. Obviously, when you assume a loan, you're using the same lender that they are with now. That lender does have options as far as what they're going to require for someone to assume it. But keep in mind that FHA VA loans are all assumable. On a VA loan, you do not need to be a veteran. But we have an example that there is a VA home assumable at 2.25%. Yeah, how many people would like to have that? So it's a great option. It's a great tool to market houses. And sometimes you'll use assumable and sometimes you won't, but it is an option. So there's different options. And, you know, everybody thinks in their mind that FHA is the only one with 3.5% down. Okay. Well, it is the only one with 3.5% down, that the minimum. But do you know that there's conventional loans for first-time buyers at 3% down? They take a first-time home buyer class and they actually get lower mortgage insurance. And a lot of times with good credit, their mortgage insurance will be less than it is with FHA. But sometimes loan officers that don't know all the programs, they're not going to think of that they'll automatically put them FHA. So that's a good option. You have USDA 100%, but it's only in certain areas. Yep. You have VA. What's better than 100% for a veteran? So there's a lot of different options for people, and you just have to know to ask them what are they looking for? What is their credit? What is going on? And ask those questions to know different options to put them in.
You know, it's crazy to think that I get phone calls every week from buyers that think they have to put 20% down. They don't. We can get them in as low as 3% down. and sometimes even less than that with some of the grant programs that are out there.
Yeah. And a lot of times you'll have their financial advisors telling them, don't put the money in the house. Why would you put money in a house when you can make money on it in the market now? Granted, that's changed a little bit in the last few weeks, but it's going to come back like everything else does. But still, you have to look at what your situation is, and what your neighbor may do is not the same as what you may do.
Anytime we're educating our buyers up front, especially when we go under contract, we make sure that we let them know not to buy anything on time. Don't open any new credit accounts up. We're going to look at their credit before closing. It's a soft pull, but we have to do it to make sure that there is no derogatory credit. At the end of the day, if somebody opens up a furniture account or a car, they purchase a car after, that has to get put on their credit and they may not qualify.
And then we have to add that to their credit report, and that may take days, weeks. You never know how long it's going to take to add a creditor. So just we need to make sure people are not doing that. Don't go shop. But you can have utilities pulled. I get that question all the time.
Correct.
Hey, I'm going to set up my account. Am I allowed? Yes, you're allowed to do that.
Yeah. A simple refrigerator that you're financing over 24 months without a payment can cause you not to close on the house.
That's right.
So a HELOC is basically withdrawing money from doing a loan on your property to pull cash out to buy another property or to do home renovations. Absolutely can use that. You can use that money for down payment. It's your money. We do have to put it on the credit report. We have to add the payment to the credit report. We have to get the terms of the HELOC into the underwriter's hand, but absolutely we do it all the time.
Absolutely. Recently, it changed a lot. It used to be that if you bought a second home, you could put 10% down and have the same rate as you do on a primary residence. And just recently, and I'll let Lou explain why, the rates are no longer that good. They're about the same as what an investment property would be. So they have changed. Fannie and Freddie wanted to change what their mix was, and they've changed tremendously. And can you explain a little bit better why? Because I think you understand it.
Yeah, Fannie Mae and Freddie Mac basically came in and said they were tired of doing second homes for investors. So people were saying they were going to buy a second home, putting 10% down, and they never occupy the property at all. There's a requirement of at least occupying a second home 2 weeks out of the year. That's what they require. With all the new Airbnbs and everybody renting their properties out, and now they're buying other second homes, multiple second homes, they said, okay, we're going to stop this, and we're basically going to price it just like an investment property. So right now, it doesn't matter, your investment property or a second home, it's the same exact interest rate, same exact pricing. And we have an elite panel of appraisals at Northpoint Mortgage that basically have agreed to do, the certain turn time, certain price, and we pay them more than the average mortgage lenders to take care of them, to make sure that they're meeting all of our timelines. Can we rush an appraisal? I rushed one the other day, got it back in 4 days. It was a $300 rush fee, and nobody complained, and we had the appraisal back before their due diligence was up. So that's the other thing I was going to mention today, is what agents can do to help us is come to us and ask us, how quickly can you get an appraiser back? How quickly can you get the approval done? We have really tight timelines, and we can meet any of them, but don't just send a contract over and say, okay, here you got 5 days to get the appraisal back, or 8 days to get the appraisal back, and 6 days to get them approved, and there's $20,000 in earnest money on the line. That's when it gets stressful. Talk to us. Call us.
Or understand that operations does not work on weekends. So the agent's timeline starts on the weekend or as soon as it starts. And if it starts on Friday and we don't get the contract till Tuesday and we know nothing about it, we just lost 4 days.
Yeah. Communicate with us.
Yeah.
We work weekends.
Well, we do, but operations does
Yeah,
not. So we don't, there's
Right.
certain things like we can't order appraisals. We can't, get it into the underwriter and things like that, because there's certain things that we can't do as sales. So the one thing I stress to my agents is that please understand weekends do exist. And even though you can call me, that doesn't mean that entire Northpoint is open. And I think that's something that I keep on trying to have to stress a little bit more, especially when timelines were so tight. Now that they are loosening up, obviously, wow, I can breathe. But it makes it very hard.
But we'll comply to,
We'll
we'll do
try.
our best to get anything done for y'all. That's how it works. I mean, we're in this together.
Through my career in the mortgages, well, first, before that, I worked for attorneys, so I watched mortgage companies my whole life, okay? And since I've been in mortgages, the one thing that makes Northpoint different, that I am very proud to finally be a part of it, and it's not because they haven't asked, it's because I didn't do it, because you got to try the little waters places before you know. They care. Every single person at Northpoint, when you reach out to them, their goal is to get your loan closed. Their goal is to make it as smooth as possible for everybody, and they really do care. And not only do they care, they understand how important their job is, and every little piece that they do is important because we all work together as a team. And that was one thing that I've always understood about this business is there's so many hands in the pot that sometimes it gets convoluted. They understand how these hands work together, and they get to the same goal. So that's why I think Northpoint is a great choice for anybody.
Well, we just had our 10-year anniversary under the Fairway Independent Mortgage umbrella. It's been an amazing run for 10 years. We're looking forward to our next 10. And the average person who is with us now has been there anywhere from 6 to 10 years. So they stay. So we're doing something right. We love it. It's been a great journey with Fairway, and they're under the Fairway umbrella and the Northpoint umbrella as well.